In the early 2000s, the video game industry was consumed by a power struggle. Sony's PlayStation 2, launched in 2000, quickly became a global phenomenon, selling over 155 million units by 2011, making it the best-selling home console of all time. Microsoft, a titan of computing, threw its hat into the ring in 2001 with the Xbox, backed by a massive marketing budget and the promise of cutting-edge graphics. By November 2001, the PlayStation 2 had already sold over 20 million units worldwide. The Xbox, only weeks after its debut, was projected to move millions more. And then there was Nintendo's GameCube. Launched in Japan in September 2001 and North America in November, it was, by many accounts, a technical marvel, boasting superior graphics to the PlayStation 2. But the market didn't care. By the end of 2001, the GameCube had sold barely 7 million units globally, lagging far behind its rivals. It was a brutal public defeat for Nintendo in the console war. Sony and Microsoft were locked in a battle of raw power and market share, while Nintendo seemed to be falling further and further behind. Yet somehow, Nintendo repeatedly loses the spec race, often sells fewer consoles than its rivals, and still remains one of the most profitable and beloved companies in gaming history. How? I dug through decades of financial reports, strategic documents, and market analysis so you don't have to, and it boils down to two radical strategic pivots and the unique power of an asset no one can buy: their characters. Nintendo's first major misstep in this new era was playing by everyone else's rules. With the GameCube, they tried to go head-to-head with Sony and Microsoft on hardware. It was a compact, powerful machine designed to be easy for developers. It even had a handle, for God's sake. Nintendo wanted to return to core gaming after the N64's cartridges alienated third-party developers. But the GameCube arrived late in a crowded market. The PlayStation 2 already had a massive lead, its killer feature not graphics but a built-in DVD player, making it a home entertainment hub. The Xbox, while newer, also offered DVD playback and a built-in hard drive, which the GameCube lacked. Nintendo stubbornly stuck with proprietary mini DVD discs and focused solely on games. It was a strategic blunder. By the end of its life cycle in 2007, the GameCube had sold just over 7 million units worldwide. The PlayStation 2 blew past 100 million. The Xbox reached a respectable 24 million. Nintendo lost the battle for the living room and, more importantly, for third-party developer support. This crushing defeat became Nintendo's greatest teacher. Instead of doubling down on the spec race, Nintendo CEO Satoru Iwata and designer Shigeru Miyamoto abandoned it entirely. They realized competing directly with Sony and Microsoft meant fighting in a red ocean, a bloody battle for existing customers, driven by ever-increasing hardware power and shrinking margins. Their radical solution was the Blue Ocean strategy: create entirely new market space. In 2006, they launched the Wii. Technically weaker than both the PlayStation 3 and Xbox 360, it offered something completely different: motion controls and an accessible interface. It aimed not just at hardcore gamers, but at families, grandparents, and people who had never picked up a controller. The industry scoffed. Analysts predicted another Nintendo failure. They were wrong. The Wii was an absolute phenomenon. It sold 20 million units in its first year, far outpacing rivals. By 2013, it had sold over 101 million units globally, generating billions in profit. It was a masterclass in market disruption, proving innovation and user experience could trump raw horsepower. But success can breed complacency, and for Nintendo, it led to the baffling Wii U. Launched in 2012, the Wii U was a direct successor to the incredibly successful Wii. Nintendo believed it had cracked the code: focus on unique hardware, not raw power. But the Wii U was a muddled mess. Its core concept, a tablet-like gamepad for second-string gameplay, was confusing. Was it a new console? An accessory? Even Nintendo's marketing struggled to explain it. Third-party developers, burned by the GameCube and skeptical of Nintendo's non-traditional approach, largely stayed away, citing the difficulty of its two-screen setup. The console launched with a weak lineup of games and, critically, very little support from other major publishers. The Wii U limped along, selling a dismal 5 million units by the time production ended in 2017. It was a stark reminder that even a brilliant pivot like the Wii could turn into a costly blunder if execution and messaging were flawed. The scorn was rightly reserved for the executives who pushed it out the door with such confused vision, leaving loyal fans and third-party partners equally bewildered. The Wii U was Nintendo's wake-up call. They had nearly bankrupted themselves trying to recreate the magic of the Wii. This time, they doubled down on their core strength, their characters, their games, and a truly innovative hardware concept. The Nintendo Switch, launched in 2017, was a hybrid console, a home system that could instantly transform into a portable handheld. It combined the best of both worlds, tapping into Nintendo's long history of handheld dominance with the Game Boy and DS, while also offering a unique home console experience. But the hardware, while clever, was still not competing on raw power with the PlayStation 4 or Xbox One. The real secret to its success was the software. The Switch launched with The Legend of Zelda: Breath of the Wild, a game that redefined open-world adventure and garnered universal critical acclaim. Soon after came Super Mario Odyssey, and then, crucially, a steady stream of first-party titles featuring their beloved characters. By February 2024, the Switch had sold over 139 million units, surpassing the Wii and becoming Nintendo's best-selling home console ever. It wasn't just a recovery, it was a triumphant return to form. The underlying reason for Nintendo's ability to lose the spec war and still win financially is its unparalleled ownership of iconic intellectual property. Think about it: Mario, Zelda, Pokémon, Metroid, Animal Crossing, Splatoon. These aren't just characters, they are cultural institutions. Sony has Spider-Man, but that's a licensed property for Marvel. Microsoft acquired Call of Duty with Activision Blizzard, a massive $69 billion investment in 2023. But Nintendo doesn't buy IP, it creates and cultivates it. And critically, this IP is exclusive to Nintendo hardware. You cannot play a new Super Mario game on a PlayStation 5. You cannot catch new Pokémon on an Xbox Series X. This creates a powerful, unassailable moat. It means that no matter how powerful a competitor's console is, if you want the next chapter in the Zelda saga, you have to buy a Nintendo console. This unique bargaining chip allows Nintendo to march to its own drum, dictating its hardware strategy without fear of losing its most valuable assets to a rival platform. It's a strategic advantage no other gaming company can truly replicate. This IP advantage directly translates into Nintendo's business model. They prioritize profit margin over raw market share. While Sony and Microsoft often sell their consoles at a loss or at razor-thin margins, hoping to make up the difference on game sales and online subscriptions, Nintendo rarely does. They design their hardware to be profitable from day one. The Wii was famously cheap to produce, allowing for substantial profit on each unit sold, even at its relatively low retail price of $250 in 2006. The Switch, too, was profitable from launch. This means Nintendo isn't constantly in a race to the bottom on price, nor are they as reliant on third-party hits to drive their ecosystem. Their first-party titles, which carry 100% of the profit margin for Nintendo, consistently rank among the best-selling games on their platforms. For example, as of March 2024, Super Mario Odyssey had sold over 28 million copies, Mario Kart 8 Deluxe over 61 million, and The Legend of Zelda: Breath of the Wild over 31 million. These are not just sales, they are pure profit drivers. This allows Nintendo to maintain robust financials even with smaller overall console sales than its rivals in some generations. Their net sales for the fiscal year ending March 2023 were 1.6 trillion Japanese yen, roughly $10.5 billion, with an operating profit of 500 billion yen, or $3.2 billion. That is a massive profit margin. To truly appreciate Nintendo's strategy, one must understand the crushing cost of the Red Ocean console war that Sony and Microsoft constantly fight. Developing bleeding-edge hardware is incredibly expensive. R&D can run into hundreds of millions of dollars per console generation. Then there's the manufacturing cost, which often forces companies to sell consoles at a loss, sometimes for years, just to build an install base. Sony reportedly lost $240 on every PlayStation 3 sold at launch in 2006. Microsoft also famously took heavy losses on the original Xbox. These companies are betting that players will then buy enough games, accessories, and online subscriptions to make up for the initial hardware deficit. It's a high-stakes gamble with volatile returns. and it forces them into a continuous cycle of escalating power and price wars. Every new generation demands more powerful chips, more memory, and advanced graphics, pushing up costs and making it harder to differentiate. Nintendo consciously opted out of this brutal, expensive, and often unprofitable cycle, preferring instead to find its own path. Nintendo's strategy isn't just about avoiding a fight, it's about building enduring value. Their characters have transcended generations, remaining fresh and relevant for decades. Mario first appeared in Donkey Kong in 1981, and he's still headlining best-selling games today. This longevity is nearly unheard of in entertainment. Their focus on innovative gameplay and unique experiences rather than raw graphical fidelity means their games often age gracefully. A pixel art indie game from 2010 can still be fun today, while a hyper-realistic game from the same year might look dated. Nintendo's games are often closer to the former in spirit, prioritizing timeless fun over photorealism. As the gaming landscape evolves, with cloud gaming and subscription services becoming more prevalent, Nintendo's IP remains its ultimate shield. No matter how games are delivered, as long as people want to play the next Zelda or Pokémon, Nintendo will have a captive, willing audience for its platforms. Their ability to deliver fresh takes on beloved franchises, like the 2023 release of The Legend of Zelda: Tears of the Kingdom, which sold over 10 million copies in its first 3 days, demonstrates the undiminished power of this strategy. Nintendo could release a new console that looks like a toaster, and if it promised the next Super Mario adventure, millions would line up to buy it. Their intellectual property is not just a competitive advantage, it is the entire foundation of their unique, highly profitable business model. While their rivals were busy trying to outmuscle each other with teraflops and gigabytes, Nintendo quietly built an empire on charm, innovation, and characters that simply cannot be bought. Subscribe to Margin, and the next video is waiting for you on screen right now.